Hi guys, Harry Yotis here. I've been a professional trader for 20 years now, started in 2005 and still going strong in 2026. So let's go on to the daily update. And before we get started, I'd like to wish everybody a merry OPEX Eve. That's what we have today because today is Thursday, the 15th of January. Looking at a chart of the S&P 500, the SPY, this candle right here is Thursday. Okay, we mentioned yesterday after this big nice wiki candle here that during OPEX everything's going to go up, down, up, down, up, down. As you can see, this big green candle here is the Monday. Went up, down, down, up. It's going to chop around. This is exactly what you want to see, or what the market makers want to see during OPEX. They want to destroy as much option premium as possible. I suspect, barring any kind of fundamentally positive or negative news tomorrow, that we probably close around SPY 690 to 695. Basically, the length of this candle, the high low of this candle, is probably going to close around there to destroy a lot of option premium that has been bought recently. Okay, that's just the nature of OPEX. So before we get started, let's always talk about the technical picture. Still bullish. Nothing has changed. Series of lower drops. The magnitude of the drop is lower every successive wave down. And I suspect once this is done, this OPEX week is done, we go higher. Okay? So merry OPEX week. So we don't even have to bring in the moving averages. They're all stacked above each other. The shorter term above the next shorter term, etc. The 50-day in red, we're well above it. And the 200-day upward sloping MA is just, still looking good, not even close to being tested. So this is an extremely bullish setup. Nothing to change here. However, we don't just look at the technicals, we also look at the sentiment. Fear and Greed Index, CNN. My. I can't believe it. The first real day into the greed territory. Instead of being on the border forever, this is the first real greedy day, if you will. Even though the market went downish, okay, I guess. Neutral price momentum, great. We have extreme greed in the strength. If you look at the sub indices, however, this put call ratio is still at extreme fear. People are still buying puts. I don't get it. But whatever, unless this is broken, which I doubt. But to see it at extreme fear at these levels is pretty telling. Okay, people are still basically 1 foot out the door, wall of worry is what I call it. Okay, and today, on Thursday, we always get my favorite sentiment indicator, which I always put more weight on, is the AAII Investor Sentiment Survey. It comes out on Thursday, and look at this, my, 49% bullish. Okay, this is what we want to see. But the bears are still hanging in there. They're not down in the teens, okay, or the low 20s. Still at 28. Remember, the average is 31, and here it's 28. The average is 37.5 for the bulls, and we just got above it meaningfully, like let's say for the past 3 weeks. Okay, this past week that ended on the January 14th here. This is very bullish. This is a good start. Okay. However, I would say it's basically 2 to 3 weeks of bullishness, but still a lot of bears. I would say this is probably the first week where we're starting to really get some bullishness to set in. I want to see this for a month or 6 weeks or something of extreme bullishness. I want this to stay here for a long time. Okay, get into extreme greed. I want to see a real kind of optimism coming up. Okay, and so far we're getting there, but we don't have it. And what I mean when I say that I want to see it there, it means that's when I will start to get worried as a bull. I would start exiting a lot of my positions and waiting for pullbacks in the market. Significant pullbacks, not like 2-3%, like 5%, 5 to 10%. Okay, that's when we want to see after we get to extreme greed, which is very possible in this situation. Okay, when you're starting at neutral and the market goes down, you're not going to see a big down move. Okay, because it's going to get bought up quickly. But if you have starting at extreme greed and it's going down, you should be very scared as a bull. Okay. So that's it. We have bullish technicals. The sentiment is starting to get bullish, so it's, on the radar right now, which is what we want to see. So that's it. We're not really scared yet as bulls. Okay, getting there. getting there, starting. Okay, what we had today on Thursday, the 15th of January, we had some good macro. I always look at this, the initial jobless claims, and look what they came in at. 198,000, a paltry 198,000. People are not filing for unemployment. Look at this down move. Okay, they are not filing for unemployment. We also saw before the GDP rising at 3%. Jobs are holding up between 0 to 100K a month. This is an economy that is slowly limping along. Okay, this is not a crash scenario yet. People are not losing their jobs. We're not seeing this spike, initial claim spike, and we're not seeing unemployment go up dramatically. Okay, we're not seeing any of that. So to me, this is still a bullish scenario. Okay, so let's move on to the last part of what I want to talk about is UUUU. You guys know that I like this stock. I've been playing it. It's one of my critical elements plays / uranium play, which is what we want. It ticks the boxes of one of the macro plays that is working, which is critical metals and rare earths, plus uranium, which is an AI adjacent trade. Okay, let's talk about this trade. Okay, because today on this big spike up, because it went close to 22. I think it went over 22. Yeah. So when it went over 22 or around 22, like 21.90, I got rid of my last piece. Okay. Yesterday, you know that I got rid of half, and today I got rid of the other half. Okay. Because what happened? Well, I got into this trade. I wanted to get into rare earths, but I needed a technical reason to do so. So I waited for a pullback until everything was starting to consolidate sideways. And around the end of November here, around November 25th, whatever, when the price was around 14.50, I entered a call spread that expires tomorrow. Okay, so in November, it was basically a 2-month call spread. Okay, and what I did was I bought the 15 call right here, and I sold, I'll put 15 here, and I sold the 22 call. Okay, so this, well, let's go back. I got into it for $1. Okay, back in November, I bought the 15 call. Could make this red, I guess. Whatever. Okay. I bought the 15 call and I sold the 22 call for $1. Okay. When we got out of it here, we got out of it at $5, half the position, and the other half position at 6. So here we made, it was basically 5.5 was the exit. Okay, and I'm going to put it here in red. So this trade ended up giving us a 5.5x return. Okay, and it took a couple of months. Okay, why? Because why? I mean, why was this a successful trade and the rest are not, or other people don't know when to get into it? Well, that's like when you have to put the odds in your favor. Basically, you have to be in the sectors that work, and you have to wait until you can get this dollar here. Because sometimes you can't. Sometimes it's too expensive. What if it was like $2-3? I'm not going to spend $3 to make 7 here. The potential max gain is 7. Okay, you almost never see it. You probably get around 70 to 75% of the max gain. So the risk reward was there in a sector that I liked. So you pulled the trigger when it was cheap. Okay, that's what you want to do, and you want to be in the sector that works. So a lot of things have to line up before you pull the trigger on a trade, and for this, it worked out. So now I'm looking for this pullback. I'm looking to re-enter this stock because I really like it. Okay, as of right now, I took my money and I'm running. Okay, I'm just waiting for the pullback. And the last thing I'd like to talk to you guys about today is silver. Okay, silver is still running. Still running. A lot of people here, after this first break happened on December here, the 29th of December, people thought it was over. After this one break, it's over. No, that's not how you approach a trade. As a trader, you always look at the fundamentals first. And the question in your mind would be, everybody thinks that, this looks parabolic, and after this break, it's over. The price is, quote unquote, too high. What does that mean? Nobody knows. We are in massively overbought situations, right, at this thing, and now it's cracking. Forget the technicals, okay? Not the technicals. Forget the stochastics. Forget overbought and oversold. Forget, quote unquote, it's too high. These are sentimental, emotional type of reactions. It has nothing to do with the fundamentals. Here, as the price went down, did the fundamentals change? No, nothing has changed, okay? And you're trying to pick a top. You're trying to it's a human psychological trait to try to pick tops that's too extreme, whatever. Why? You have no reason. The lesson here is that you never know when this thing will blow off. It's starting to get into a blow off top situation. Okay, and I suspect silver goes we're at $92. We don't know how high it could go. It could go to 100, 150 before it breaks. You have to wait till it breaks and then wait till it retests the 50. Okay, this is a little secret. Like the first time a real breakthrough happens, the first time it touches the 50 is almost always a buying opportunity. Okay, and that's what I'm waiting for. This is going to catch up very quickly. So basically, don't get into the trap that everybody gets into after being in a trend that is fundamentally driven and then everybody tries to fade it. It's human nature. You don't try to fade it. You don't go against a trend. Okay? Especially a fundamentally driven one. This is a real trend. Okay? You wait for the break, which will happen. It hasn't yet. I mean, look at today. Today, silver went down $6 in the morning. You see this wick? I don't know if you guys can see it, but there's a big wick here and then bought back immediately. It's just telling you that this is not the time for it to break. It's not breaking. We want to wait for something like this situation here to arrive, which is when we got into it again. Hit, break, consolidating here, and that's when you enter. And people were scared to enter it here. Okay, this is when you enter when it breaks, consolidates, and people are scared. Not right now. Okay, right now we're looking to sell. You should be looking to sell after breaks a little bit. Okay. Still keep your main core position because the fundamentals have not changed. Always stick with the fundamental trend until the fundamentals change. Okay, so that's what I wanted to say. Okay, don't try to pick tops and bottoms, especially when it gets volatile. My end game for silver is that I expect a blow off top. It's going to re-rate higher. It's going to break and then do this kind of consolidation at a much higher level. Where? I don't know. Could it be we hit 100 here in silver? 100 and then it goes all the way back down to 75 and consolidates? Maybe. Could we hit 120 here, 117, which is I marked this 117 level as the inflation adjusted high of the 1980 Hunt Brothers move. Okay, 1980 inflation adjusted high for silver. Okay, and that's if you use the official CPI figure for inflation. If you think inflation's higher, it's much higher. So could it hit 117, then drop down to 80 or 90 and consolidate? Yes. So we don't know. So that's what I'm waiting for, to blow off top. I'm waiting for a re-rate at a much higher level, and I'm waiting for volatility to drop before entering. So that's what I wanted to say about silver. So let's recap. SPY, still bullish. Merry OPEX. Tomorrow's going to be OPEX. I'm expecting it to close between 690 and 695, killing all the premium and all the option guys who bought. The Johnny-come-latelys. Sentiment, I'm still liking it. It's starting to get greedy, but not so. Just like the AAII, starting to get greedy, but not enough of greed and solidified greed. Okay, what we want is this in the greed for weeks, not 1 or 2 days, because boom, people are going to start getting scared again and buying puts. Okay, so we're not there yet. We also looked at our UUUU trade. Okay, we bought the calls when it was consolidating, just like I expect to do with silver, when it was consolidating the end of November. Okay, sideways pattern for a long time, for a month. And then we bought it, and we reaped the rewards. I expect to do the same with silver. And mentioning silver again, wait. There's going to be a reckoning, okay? And today is telling you that, nope, the buying is still not over yet. They tried to sell it, ripped them in their faces. Don't try to time tops. Let the market decide, okay? That's it, guys. Of course, like and subscribe. I love doing this, but it would help if you guys could leave a comment below or like and subscribe. It helps with the YouTube algorithm. And let's see what happens. OPEX tomorrow. Crazy things could happen. You don't know. I suspect it stays flat, but there's going to be a lot of volume. There could be opportunities to buy in individual stocks that go super down on OPEX or sell at super high spikes. Okay. Anyways, I'll talk to you guys tomorrow. Later.